at some point down the road, what if it just is the case that Bitcoin continues to grow in market value and adoption such that more and more households and corporations around the world have some Bitcoin in their portfolio that they just know that, oh yes, this is very marketable. I can use this to buy from anybody on planet Earth. Again, maybe it's not that it's in day-to-day commerce and you're buying coffee with it, but if it's serving that function, then clearly you could imagine a scenario where Bitcoin is held by institutions as a reserve asset the same way gold is right now.
Welcome to Infi, the future of finance.
Hey everybody, welcome back to the Infi podcast. Today I am speaking on blockchain-related topics. Specifically, I am going to touch on the strategic Bitcoin reserve that Donald Trump just had an executive order that, as I'm recording this, came out yesterday. So I'll talk a bit about that. And then I also want to give my thoughts on this has happened a while ago at this point, but the Bybit Ethereum hack that was $1.4 billion of Ethereum at the time, which is not only the largest crypto theft in history, but I was listening to some commentary and people were saying this is arguably the biggest theft in all of human history, right? In terms of market value. That we could talk about central banking and whatnot, but you get what they mean. So those are the two topics we're going to cover today. So first, as far as the strategic Bitcoin reserve, again, it was more reserved, no pun intended, than some people were hoping for. And that's actually why the price of Bitcoin fell upon the announcement, which surprised some people. And I'm just repeating what a lot of other analysts were saying, and I think it's correct, that the announcement only said thus far that the strategic Bitcoin reserve would hold Bitcoin that U.S. authorities seized through criminal prosecution, that kind of thing, or fraud cases, whatnot. All right, so it was merely saying we're not going to sell that stuff off. And you might say, well, why would they have done that? Well, the Biden administration was doing that. Okay, and so this is a clarification just to say, yeah, we're not going to sell that stuff off. And in general, especially like for other listeners who are outside of the U.S. or whatnot, like that, this is controversial among radical libertarian types, but in general, U.S. authorities, if they arrest and hopefully convict somebody of a crime and then they have some property that was, in the criminal's possession, a lot of times it's called asset forfeiture. And so that ends up being in the hands of the government. And then what are they going to do with it? Like if they seize some drug dealer's car, they're just going to have a growing stockpile of cars. So they sell the stuff off, right? And then they get the money. And so one could have thought, oh, if the authorities arrest somebody who's engaging in crime and they happen to get their hands on a bunch of Bitcoin that gets forfeited to the government according to the rules that you may disagree with, then, oh, what does the government do with that? Oh, they could just sell it off for US dollars and then put that in the general budget. And so Trump's announcement was clarifying that we are not going to do that anymore. Instead, we're going to put such seized or forfeited Bitcoins into the strategic Bitcoin reserve. But it didn't specify that we're going to start stockpiling and adding, going out in the open market and buying. And so then, again, that's why people think the price probably fell, because Bitcoin investors were speculating that, oh, if they announce that they're going to start accumulating, that's going to push the price up. So the price was higher in expectation of that being the announcement. And there were other elements as well, but I don't want to focus on those today. What I do want to focus on, though, that is up my alley is a proposal. So this is flowing out of Senator Lummis's office. She was the one that had the original legislation for a strategic Bitcoin reserve. And so in her proposal, the government really is going to go out and on net start buying new Bitcoins and add them to the strategic Bitcoin reserve. And she wants it to be reserved exclusively for paying down the federal debt, like to try to, remove the temptation just to create a slush fund. Okay, so I have been giving my qualified support for that kind of idea in some of my work. Just very briefly, my point has been, look, let's get with the program, guys. The U.S. authorities, partly in the guise of the Federal Reserve, the central bank, they hold reserve assets, right? The U.S. government owns 8,000 plus tons of gold, at least they say they do. And they also hold a bunch of different currencies in terms of, foreign exchange reserves, and central banks around the world do that likewise. And so at some point, as if Bitcoin continues to grow in popularity and importance, as if you don't want to call it a money, call it whatever you want, a financial instrument, a monetary like element or asset like gold is, right? Right now, gold is not really serving as the day-to-day money for anybody on planet Earth. But certainly central banks still, and just regular governments stockpile it. Okay, why do they do that? It's not merely that they're making a speculative investment the way like a sovereign wealth fund might own some stocks and bonds. No, it's because of its historical legacy as a monetary instrument. So likewise, at some point down the road, what if it just is the case that Bitcoin continues to grow in market value and adoption such that more and more households and corporations around the world have some Bitcoin in their portfolio that they just know that, oh yes, this is very marketable. I can use this to buy from anybody on planet Earth. Again, maybe it's not that it's in day-to-day commerce and you're buying coffee with it, but if it's serving that function, then clearly you could imagine a scenario where Bitcoin is held by institutions as a reserve asset the same way gold is right now. And so the argument that I have been making is if that it comes to be obvious 10 years from now, surely at that point, all the central banks and or central governments that currently hold euros and yen and US dollar denominated assets as part of their reserves and gold, surely it would be natural for them to work in Bitcoin into that mix at that point. And so if today we think that that's coming, well, the governments that get in on it early are going to benefit. All right. So that's the argument. And then moreover, I understand why a lot of US based libertarian types are very skeptical of this. And they say, whoa, we're already $36 trillion in debt. Now we're going to have the government go deeper into debt to be basically speculating with taxpayer money on some digital asset. That's crazy. Yeah, if you frame it like that, it's crazy, but you don't need to frame it like that. There's a way to do it such that US taxpayers are not put deeper into debt. And so specifically, there are lots of assets right now that the federal government owns. And so you could just have the government sell off some of those and then get into Bitcoin. So it's just like a rebalancing of the portfolio, if you want to think of it that way. So it's not plunging the taxpayers deeper into debt. And for people too that are saying, oh, I thought you guys were free market libertarians. Why do you want to have the US government now getting into the crypto space? I mean, you can say that, but right now the government is deep into the gold space. And you know what they're really big into is student loans, right? So the government right now, here, I'll put up a graphic here if you're watching the video. You can see here, the US government owns over $1 trillion worth, at least on paper, of student loan debt. And you can also see that it skyrocketed starting in the Obama administration. Okay, so this isn't something that's been the case since the 1960s. It was relatively recently. Again, it was under the Economic Recovery Act, or I forget what the name of the legislation was. I think it was ARRA, under the Obama administration that first allowed for this, where the federal government began rapidly accumulating student loan debt as an asset. And I mean, it wasn't doing it for investment purposes. It was doing it ostensibly for educational reasons. But anyway, I'm saying we're now at a point where I think it's something like 93% plus of all outstanding student loan debt in the United States is owned by the US federal government. So that's a pretty big footprint. That's a lot of government intervention in higher education, besides all the other things that they're doing. And so also remember how often and hard the Biden administration was pushing to, quote, forgive the student debt. And so I think for Republican conservative types who are against that and think, oh no, the taxpayers were implicitly subsidizing these students for them to go and end up getting degrees in whatever that are crazy. And then now if Biden just forgives it, then that's just a giveaway to those people. And that's kind of nutty. And if we're going to be subsidizing people and giving breaks, maybe give it to, because people with college degrees tend to be wealthier and have higher income potential than people without college degrees. And so it's ironic that it was being cast as, trying to just help the poor beleaguered 25-year-old barista, when no, it's more like it's taxing the blue collar workers who never went to college in order to fund frat parties for people who get nonsense degrees, right? That's another way of saying it. Okay, so my point being, instead of the federal government sitting on all the student loan debt, where as soon as the next liberal progressive Democrat takes the White House is probably going to be, quote, forgiven, what deficit hawk, fiscally conservative, Doge-loving Republicans could do right now is try to privatize a bunch of it. And yes, you're probably not going to get 100 cents on the dollar if it goes into the private sector, that if I'm an investor, I'm not going to give $10 million to buy, quote, $10 million worth of federal student loan debt, because there's a good chance a lot of them are not going to be performing, or in the future, when the next recession hits, they're going to fall behind. But still, you could get something for it. And so I'm saying, especially if the counterfactual is we're going to hold it and then end up forgiving a bunch of it 4 years from now when the next Democratic administration comes in, if President Vance doesn't get elected, then you could say, all right, why don't we sell off, I'm making numbers up, half of it for $200 billion in cash from investors. And then they can go take that, and they hope that it ends up being profitable for them because they bought it at such a discount. And then you take that $200 billion and you go buy $200 billion worth of Bitcoin. I think 10 years from now, that move will have the U.S. Treasury in a much better financial position than if they continue with the status quo and sit on all that student loan debt and don't buy more Bitcoin. All right. And say, well, at least the government now is being pure and it's not intervening in the financial sector. All right. So that's the kind of argument I'd make. And just in general, if I were consulting with a private company and they had a treasury and they had various assets on their balance sheet, and especially if they had things that were supposed to be inflation hedges, they had some exposure to gold and maybe, gold mining stocks and things like that, just in the case of the dollar crashed and they had fixed income assets that then would get crushed, in real terms at least, I would say, well, do you have any Bitcoin? And if they said, no, we have zero right now, I would say, that's kind of crazy. Why don't you diversify and get some of that in the portfolio, right? So that's what I'm saying, that when the federal government is considering, should we start accumulating Bitcoin? To me, yes, as a radical libertarian, I would like the federal government to sell off all of its assets, to get rid of all taxation, to devolve all of its major functions to the voluntary private sector, blah, 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 or let the states do things. But that's not going to happen in the next 2 weeks. And so given that the U.S. government is going to continue to own reserve assets in terms of other currencies and gold, I think it makes sense to include Bitcoin. They're going to do it eventually. Another analogy I used is to say, people say, oh, no, that's crazy. This is a newfangled thing and the government has no business owning any Bitcoin. Are you okay if Treasury and Federal Reserve officials use email? Because they didn't used to do that in the 1950s. They would call people or write them letters, right? Send them telegrams, right? Eventually they start using email. And so I'm just saying, I think that this is, in some respects, just an acknowledgement of reality. And that there's also a bit of a self-fulfilling prophecy, whereas if the U.S. government makes this move and starts accumulating Bitcoin, then that will probably make other governments follow suit. And then that will make it more likely that future scenario where Bitcoin is held by all major institutions, and that's just a matter of course, that's more likely that world will come to be. Okay. So last point I want to make just on this topic is, as far as rebalancing the portfolio, one thing people have pointed to is the U.S. government's ownership of a huge stockpile of gold. And the quirk here is that on its books, the government carries the gold as being valued at $42.22 an ounce. And so I've heard proposals, there's different variants. So one idea would just be to say, let's just sell off some of the gold and use the money to buy Bitcoin, right? Just like if you had a regular corporation that had some gold holdings and you thought, hey, you should diversify and get some Bitcoin there, you could just, sell down some of that and buy Bitcoin, and you're not floating new bonds to do that. You're just kind of rebalancing. You could do the same thing here and say, hey, instead of owning 8,000 tons of gold or whatever the number is, why don't you sell off some of that and go buy Bitcoin? But I've heard people say, oh, isn't there a way to thread the needle where we don't even have to sell any of our gold? We don't have to burden the taxpayer with new debt, and we can go acquire a bunch of Bitcoin and it won't be inflationary. And so the way I've heard this described is to say, we're going to revalue the gold that the government's owning right now and market to market, right? So instead of it being $42 and change an ounce, we're going to market to the current spot price of gold, which right now is 2,900 and change as I'm recording this. So the idea is instead of it being $42 an ounce, have it be close to $3,000 an ounce. So there's a huge gain right there. And then, so the argument goes, somehow the government is going to, the Treasury is going to get the Federal Reserve to acknowledge that. And then all that capital gain will somehow accrue to the Treasury because the Fed remits excess earnings to the Treasury. And then the government can go buy all sorts of Bitcoin just based off of that revaluation. So it's not selling the gold. It's just that jump in value from marking it to market instead of carrying it at the book price of $42 an ounce. Then, yeah, that's how we're going to go buy the new Bitcoin. So we're not actually giving up physical control of our gold. We're not issuing new debt. So the argument goes, and it's not inflationary either. The Fed's not creating new dollars. It's just acknowledging the jump in the assets. Okay, so that part doesn't, I don't see how that works. All right, so just to give a little bit of the background, back in the day, in the 1920s, or before World War I, under the classical gold standard, all the major belligerents had their sovereign currencies tied to a specific weight of gold. And that was called the classical gold standard. Okay. The US, it worked out to, it was defined like in terms of grains, but it worked out to about $20.67 for 1 ounce of gold. Okay. And then if you looked at what the British pound was, I think it was 4.25 British pounds traded for an ounce of gold. And so if you did the arithmetic, it was like $4.86, I think, was the US British pound exchange rate, right? That was like the anchor point. Okay. So because all of the major powers tied their currencies to gold in terms of like the definition almost, then it implied sort of anchor exchange rates between the different currencies, you know, the US dollar, the British pound, the French franc, German mark, and so on. Okay. By the way, just to be clear, it wasn't a price control, right? You could sell dollars for pounds at whatever rate you wanted to. It's just that anchor points showed you could always engage in operations where you turn in dollars for gold or you turn in pounds for gold, ship it across the ocean, and then do it at the other end to do the gold for the currency. And so if there was too much of a gap in the foreign exchange market between the different currencies, it would open up an arbitrage opportunity for somebody, you know, who would trade the currency for the gold or vice versa and ship it across the ocean. Okay. So that's how the classical gold standard kind of kept all the countries relatively honest. They couldn't run their printing press too aggressively because then all the gold will get drained out of their vaults. Okay. Well, then World War I comes along. Everybody except the US goes off gold. They come back. It causes problems. In 1933, under the new Roosevelt administration, he issues an order that all the US citizens have to turn in their gold or else they go to jail for 10 years. This was what was called the US went off gold. No, the Roosevelt administration said everyone turns in their gold or you go in a cage for 10 years and he had to pay a big fine. All right. So that's, it wasn't the quote, the US went off gold because it didn't work. So now the authorities have all this gold and then they revalued gold in the 30s, right? So the Roosevelt administration, after it acquires all of this gold and gives people dollars at the rate of, $20.67, then it revalues gold to $35 an ounce. And so that's a neat little trick. If you get a bunch of gold at $20.67 an ounce, and then you legally change its definition so that now the gold is worth $35 an ounce, you just earn that profit. All right, so they did that little trick. That was the official dollar price of gold all through the Bretton Woods era. And then there was a lot of pressure on the dollar in the late 60s because of the Vietnam War and the so-called War on Poverty, the Great Society programs of LBJ. The Federal Reserve is printing a bunch of dollars, making it harder and harder to keep the $35 an ounce peg. And eventually, it first went up briefly to $38 an ounce. Nixon closes the gold window in 71. And then in 73, it gets revalued to $42.22 an ounce, right? So at that point, that was an admission that the dollar was weaker than it had been because the gold price measured in dollars went from first 35 to 38 and then to $42.22. Okay, so that was a devaluing of the dollar at that point. And then all the gold still that the federal government held, it just kept, but it was carried on its books at that now book price of $42.22. And that's just where it stayed. And then eventually, they changed the rules such that people could own gold again and so on. But the government just continued to carry it on its books. All right. So that's what people are talking about when they say, oh, the government just needs to revalue its gold holdings. So my modest point is, yeah, you can do that. And then there will be a capital gain in terms of the accounting. But if you want to somehow take that bookkeeping operation and then go into the market and buy a bunch of Bitcoins from existing owners and have them transfer ownership to you, they need to be given dollars. And so if it's merely a bookkeeping operation and you're not creating new dollars, the Federal Reserve is not in any way creating more reserves, then the fact that on your books you change a number and say, oh, instead of us valuing the gold at $42 an ounce, now we're valuing it at whatever, $2,950 an ounce, that doesn't give you more dollars to go buy Bitcoins with. Unless you sold the gold. That would work if you said, oh, now we got all this extra gold here, we can sell some of it off and we're not hurting our financial position relative to what we were showing as of last week. Because now we have this humongous capital gain. We'll sell off some of the gold. We still own way more gold measured in dollars, not measured in ounces, because of the revaluation. And so we can now go buy some more Bitcoin, and our total assets are still being shown as higher than they were last week before we did the accounting change. You could do that, but again, notice you did have to sell some of the physical gold. Okay. So anyway, I'm just making the modest point that I have not had someone explain to me that how could it be that through the Fed remitting earnings to the Treasury or whatever, that they could come up with dollars to go buy Bitcoin without having created the dollars and without selling any Bitcoin. I think something doesn't quite work in that respect. So anyway, I just think the proponents of this idea either need to explain to me what they have in mind. Maybe I'm missing something, but I think they need to pivot away from that talking point if indeed I'm right. And no, you would have to do one or the other. Okay. Let us now pivot to the Ethereum Bybit hack. I just want to share my thoughts on that. So a few weeks ago, there was, again, this $1.4 billion heist. There was a sophisticated attack where Bybit, they had a bunch of Ethereum in a cold storage wallet, and it was multi-sig, where I think they had to have 3 different people sign off on it, including the CEO. And yet these hackers that have been tied to a group that's connected to North Korea. And here I'm going to be a bit vague because if you push me too far, I'm going to reach a point where I don't understand the details enough to speak intelligently about it. But the wallet didn't fail. It wasn't that. And it was even the CEO was the last person to authorize the transaction, the CEO of Bybit. And so what happened is somehow they hacked like the user interface, and what the CEO and the other 2 people who signed off on the transaction, what they thought they were doing was merely moving something like $30 million worth of ETH from the cold storage wallet into the exchange just to bolster their reserve balances for the daily withdrawals and whatnot. And instead, that gave access to the wallet to this outside group, and then they just drained the whole thing immediately. Okay, so that was the news hook. And then lately, I've been participating with Wolf Crypto on their X Spaces. And so last week, that was one of the topics of conversation. And the broader context, the group was discussing stuff like know your customer KYC regulations and AML, anti-money laundering regulations, and how does that apply in the world of crypto. And they were saying, hey, there's these apparent trade-offs where on the one hand, a lot of laissez-faire free market types wish, hey, there should be no regulation, just buyer beware, do what you got to do. And hey, that's the beauty of it. It's the cold, hard reality. And if you misplace your private keys, then tough, but it is what it is. It's a mutable ledger. But then other people were saying, yeah, but when there's cases like this where there's a huge heist, everybody knows it was a theft, what do we do? And so people may remember there had earlier been, like years ago, early on, a massive taking advantage of loopholes in the governance structure. And what they ended up doing was rolling back the blockchain. They actually had a fork. Okay. In other words, like to undo the transactions. So then this time around, people had briefly toyed with that, right? When there's this well publicized, like everybody knows, oh yeah, this was not legit. These guys came in and fraudulently, deceived the three individuals involved to get them to authorize the transaction when they shouldn't have, and then they drained the wallet. Everybody knows that was a crime, that was theft. And so the idea was, well, hey, I mean, the people running the Ethereum blockchain, strictly speaking, they have the ability, they could, quote, turn the clock back and just unwind all the transactions to that one and then not authorize that and have the blockchain move forward, restoring the stolen the stolen ETH. But the problem is Ethereum is so big at this point, and even though that's a massive dollar figure, that was like less than 0.5% of all the Ethereum on Earth at that point, which is still kind of a big number. Like that was all in one wallet that got stolen. That's still kind of impressive, but still, that was relatively small compared to the size of the market. And so the idea is, by the time the theft was recognized and everybody was alerted, and then the community would have to, decide, should we roll the clock back? How many transactions would have occurred, like legitimate ones from that point forward? And so you would have to unwind all that stuff. And the idea is just that, no, we can't do that. So an analogy would be, if somebody robs a bank, the US government it would be crazy to deal with that by saying, hey, all US currency is invalid. And so just come in and turn in your existing currency, and we'll look at it and we'll determine from the serial numbers if your currency wasn't involved in that heist, that bank robbery, and then we'll give you new currency that is purple. And so that everyone going forward, everyone just knows the only purple US currency now is actually legal tender. And that's the way we'll deal with it. Because when those bank robbers come in and try to turn in, we'll look at the serial numbers. Oh, no, this was the stolen one. We're not giving you the purple notes. Right. That would be insane if you had to completely nuke everybody's existing US currency just because a small portion of it was stolen. So likewise here, the argument was, no, even though this was an incredibly big heist, rolling back the Ethereum blockchain to undo all the transactions back to that point in time is so as if it never happened. That's unacceptable. That would just cause too much carnage elsewhere to people who are legitimately using it after that theft occurred. Okay, so there's that element. And so then, again, this discussion I was on, people had their different views. And so my point was that I think, especially in the long run, because I think you're going to have a more polarized world where it's not going to be the US government and the European Union are the ones that are going to basically control the financial sector the way it is right now, that I think we're already seeing that's slipping. And I think that's just going to become more fragmented in the future. And so part of what I see is the rise of blockchain-based finance is that it is going to transcend international boundaries and jurisdictions. And so I think people building in this space and doing business in this space and so on, we need to look ahead to a world where you can't just turn to the government for common sense regulations, and it's going to all have to be done from the bottom up, as it were. And so on this general topic, just broadly speaking, my proposal was to say, I think what we're going to have to come up with is people will need to decide what types of transactions are we going to determine are illegitimate, and then any coins obtained via those illegitimate methods, we are going to pledge we will not accept those. And that is the way to handle this, or that's one way of handling it that I think should be further explored. Okay, so in particular, well, let me back up. Think of something tangible. Like, what if somebody steals the Mona Lisa? Okay, part of the difficulty with that, like why it might not be that advantageous to steal the Mona Lisa, is even if you could pull it off, what are you going to do with it? You can't go sell it 2 weeks later and make a bunch of money, because that would be global news. Somebody just stole the Mona Lisa. And so if it shows up 2 weeks later and someone's trying to sell it, the authorities are going to show up and say, hey, how did you get this? You're like, I got it from some guy last week. And then they say, you didn't hear in the papers that it was stolen? It didn't seem to you weird that some guy's selling you the Mona Lisa? Right? So somebody who stole the Mona Lisa would at best have a narrow criminal network that they could fence it in. And then, maybe some collector in some third world country or something would have it and would show his buddies at dinner parties, and they would think that was cool. Like, look at you got the Mona Lisa. Good for you. But you can see that it would forever then be underground. And so the idea of saying, oh, how much is the Mona Lisa worth right now if they sold it? And so if somebody stole it, that they could think, oh, so now I can get that amount of money. No, you couldn't. The act of you stealing the Mona Lisa would mean its market value would plummet. And so that's the intuition I have here for this Bybit hack, where the ETH that was taken from this cold storage wallet, we can track it. They can see where it went. And so I'm saying if it were the case that literally as soon as the theft was reported, if every other legitimate operation on Earth just adopted the standard that, okay, these particular coins that were stolen, we will not accept it in any commercial transaction. Well, then that instantly reduces the marketability of those particular coins. And so, yeah, they can go over to North Korea and maybe people inside the jurisdiction of North Korea can trade them freely, but that's all you can do with it, right? If nobody outside of North Korea would be willing to accept those particular Ethereum coins, then there wouldn't be no benefit from stealing them, if you understand what I'm saying, right? And internally in North Korea, they could just also create Kim Jong playing cards, and they could use that as a currency and trade it among themselves, among North Koreans. There's no point in importing Ethereum into North Korea if the only place now you can spend it is also within North Korea. It loses its utility or its marketability. Okay? So that's the modest point that I'm making, but I think there are implications to that. So I want to be clear, a version of what I just said happened in the real world, right? As soon as that theft was reported, the FBI and other groups, made announcements, and they could track and see how very quickly the Ethereum was moved to one address, and then bam, they dumped it to 50 other addresses, and then they were trying to run it through mixers and things. And there were certain platforms that are decentralized and autonomous where it's not like there's some human that authorizes each transaction, where you can basically, pump Ethereum in one end and then it gets traded for Bitcoin and other stuff out the other end. And so a lot of those places, once news of the Ethereum hack was publicized, the people running them went in and tweaked their algorithms to stop the bleeding, to say, okay, we're going to not allow any of these new ones to come in the front end. So there was some slippage where the people who got the original Ethereum were able to transform it into other coins before people could slam the brakes on that process. You could call it fencing or something, or money laundering. But still, even there, you can technically go and trace and see, well, what did you trade them for? So anyway, my point is simply that the benefit of blockchain-based financial transactions is that you do have this permanent record. It's crystal clear as if somebody steals coins, where they go and then what they were traded for. You can track all that stuff and do what you will with it. And so what I'm saying is, and here's the last point I'll make, is about the possible Orwellian implications, right? So I said that on this X space with these guys with the wolf community, and then somebody else, we were getting ready to close the thing down, so we didn't have a chance to go back and forth. But then somebody was like, whoa, Bob, there, you're kind of blowing my mind with your comments that, geez, I don't know if I like that kind of a world where if people just want to buy from vegans, they want to have a boycott of any meat eater who wants to engage in commerce, and they want to accept his tokens, geez, I don't know if I like that. And okay, I understand why when you just first say the concept, it's scary, but again, you could do that right now. So what would be the flip side? To say, I have to be forced to engage in commerce with people I don't like? How are you going to enforce that? Do you see what I'm saying? Like, in other words, if somebody wants to buy my product and they want to sell me some coins, surely I have the right to say no. And so the only way to really implement this guy's view is to say, oh, but you can only say no for approved reasons. If you're saying no because, no, you're not offering me enough, like I want to sell my car and this guy's offering me a certain number of Bitcoin Satoshis for it, and I don't think it's enough, I'm allowed to do that. But I can't say, oh, because it's a meat eater who's trying to give me the Bitcoins for my car, and so I'm going to say no. That's not permissible. Like, how would you ever possibly do that? So if people ultimately have the ability to accept coins from potential traders or not, then they're going to have the ability to not approve transactions for reasons that you might not approve of. Okay? And so all I'm saying is, I think that ability could be organized more systematically And so groups could emerge that would say, hey, what we do is we try to minimize the benefits of stealing Ethereum. That's what the function of our organization is. And so when people come to us and they report a hack and they give us a bunch of evidence to support the claim that, yes, I was the rightful owner of these Ethereum coins, and then they were fraudulently extracted from me and transferred to outside addresses against my will, or, because I was misled, and here's my evidence. And then this group could issue a ruling and say, yes, we agree those Ethereum coins were stolen, right? And this doesn't need to have the force of law. It's not like this is a government body. It's just they make the proclamation. And then for the rest of the people on planet Earth, they have the option to take those proclamations seriously or not, or to act on them if they want to. And so if they decide, yep, this group has shown over the years that it is very careful. They have strong procedures in place, that they only issue a proclamation saying these Ethereum coins have been stolen when there is really, evidence to prove guilt beyond a reasonable doubt, let's say. And there's ways that you can appeal, like if that other group says, whoa, what are we talking about? No, this wasn't fraudulent. And then they give a chain of emails and screenshots and whatever showing, no, this person is lying, that we sent him the product, he sent us the Ethereum, and now he's just trying to get his Ethereum back. What are you talking about? You can't do that. So this group doesn't need to be naive. In order for anybody to take their proclamation seriously, they would have to have procedures in place and have this reputation of making solid judgments. But if they did earn that respect in the community, then that could happen. And so the community then could say, yes, this group, every 10 minutes, they update their list of Ethereum tokens that are suspect or whatever, or varying degrees of dubiousness. And then, what our organization does, if we're an online business and we accept Bitcoins and we accept Ethereum and blah, 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 we won't accept those particular coins. So notice, it's not here blackballing organizations. It's saying, no, we will not accept stolen money. So it's like if you realize that a particular, $100 bill was counterfeit, and you're some business and your cashier has been trained to, when someone tries to pay with a $100 bill, you hold up to a certain light, or you have the highlighter or whatever. And there's ways of testing it on the spot, and just to say, oh no, this is counterfeit. So not even saying that you, Mr. Customer, are a criminal, right? Maybe you unknowingly accepted this in one of your transactions. Maybe you weren't the one who created this counterfeit $100 bill, but our business does not accept counterfeit money. Sorry, pay with something else, right? So it's not that you're blackballing that individual. It's just, no, when someone's trying to pay, you can't use a counterfeit $100 bill. And so likewise here, it's not even that these organizations are going to go around identifying bad actors and saying, oh, anything coming through this address, don't use that because they've been linked to organized crime. It's not what I'm saying. I'm saying though that you can clearly identify which particular crypto coins or fractions thereof have been obtained via fraud, or it could be outright theft too. Like somebody could break into your house and hold a gun to your head and say, give me the private keys to your Bitcoin or I'm going to kill you. All right, that could happen. That's not really fraud. That's just outright theft, right? So there's things like that too. And then, if you had that on tape, you had your home security footage and you sent it into one of these organizations and you showed, hey, this guy, there was nothing wrong in terms of the private keys and whatever. And it was, quote, a valid transaction to move those Bitcoins from the one address to the other. But here's the backstory. Look at what was happening in my house when this guy was holding a gun to my head and made me go to my computer and authorize it and sign the transaction. And so that guy clearly stole them from me. So if you could convince this organization that, that's what happened, again, they don't have the police power. They can't send the police after that guy and throw him in a cage. But what they could do is announce to the world, hey, all you who accept Bitcoin in transactions, we think you should know that these particular ones were obtained by some guy putting a gun to somebody's head. So if that's not how you roll, if you'd like to minimize that sort of activity, then we advise that you don't accept these in transactions. So that's just the framework I'm envisioning. And again, the beauty is, if you're worried about Orwellian stuff, well, stuff that most people agree is silly is not going to gain traction. And that's the fundamental difference between this sort of voluntary community expert approach versus authoritative government official approach. that with like KYC and AML and whatever, there's lots of regulation. And this is partly what we were getting at in the X space discussion, where actual criminals can pass those checks. They can just fill out a questionnaire and say, oh no, I'm a legit businessman. And this is, they can just lie, right? So it's not that these official government screening mechanisms actually prevent criminals from doing financial transactions. And the flip side error happens too, where they do at least slow the wheels on legitimate transactions, right? So there's like type 1 and type 2 errors, if you're familiar with that terminology. So I'm saying the beauty of having groups that they have no police power, they can't use guns to enforce their proclamations. All they have is their reputation and the procedures, their protocols by which they issue their proclamations. And so, yeah, presumably a lot of people don't care whether someone is a vegan or not. And so if you're a meat eater in this voluntary framework, you don't need to worry so much about, oh, well, geez, what if all of a sudden 99% of the other humans on Earth didn't want to do business with a meat eater? Wouldn't I be in trouble then? Well, you would be, but that's not going to happen. And then last point I'll make here is, even in that nightmare scenario where, oh, there's some despised minority, let's just say redheads to keep it not as emotional. All of a sudden, the majority really doesn't like redheads and they're going to just economically boycott them and ostracize them. And now they can't buy anything with their crypto because the rest of the community just says, no, we don't accept crypto from redheads. Okay, you don't solve that problem by then having a government come in that wins through popularity contests every 2 or 4 years and then implements a one-size-fits-all set of regulations, right? If you're worried about the majority oppressing a despised minority, having the government get involved isn't going to fix the problem. That's going to solidify the problem, right? Because you only need to have 51% of the voters think a certain thing, and then it's going to get imposed on everybody, right? Whereas if you're worried about, if it's just a community or whatever, if 40% really doesn't care about redheads one way or the other, the redheads can still do business with that 40%, even though the 40% is in the minority. If 60% of the community doesn't want to do business with those redheads, the redheads can still do the business with the 40%. But now if you put it up to a democratic process, the 60% are going to win the elections and their people are going to get in there and they're going to have anti-redhead legislation. Because if by hypothesis, this is a despised minority, why would you think that the government then is going to protect them when the government is installed by public opinion? So there, I've sketched out my view. I hope I've provided you food for thought. Thanks for your attention, everybody, and we'll see you next time.